and investors, how do you like an early start for today's closing print? Triple D joining me, making a quick run out to the bus stop. Michael Pachter coming in, and then Triple D will be back with us for a few minutes. Let's go flat on the session here. Made a new high for the move. Choppy afternoon consolidation, kind of like what Anne Marie Van talked about today. The buck up 14 cents, 104.35. TLT flat. Crude up 69 cents, 79.32. Gold in the red by 10.70. Silver in the green by 15 cents. And Bitcoin down fractionally, $755. Let me stop the screen share and Triple D. A choppy day to say the least.
Yeah, very mixed markets here, Joel. I'm seeing half my stocks are up, half my stocks are down. It's mega cap tech taking a little bit of a hit, but then there's Google and Tesla are up. It's very mixed. Nvidia is having a good day, AMD is having a great day. We talked about
Uh-huh.
AMD, and all of a sudden they decided that they're buying AMD today. So some of these laggard tech stock plays are showing a little bit of life. Snowflake showing a little bit of life the last couple of days. Palo Alto Networks, which was beat up after their earnings, is starting to come back just quietly, trying to fill the gap here. So I think there's a play to start go hunting on some of the beaten down tech names. And you know what I found interesting too was Baidu. They
I
really
know.
hammered it off the opening here. The numbers were good. I said the numbers were good. I'm still long the stock. It's a full size position for me. I took it through the report. I was like, when they were hammering it on this morning, I'm like, man, I don't see the numbers, but they just hate on China. Well, they turned around and they key reversed this thing. And now it's actually trading higher here. So full key reversal from the day before. I don't know, what to say because they just seem to hate on China always. But I still think like Baidu is one of the best plays. And then you got Baba, which is
Oh
just
boy.
flying. So really, the strength in China here is very apparent today. So China stocks, which have been really beat up, we keep thinking, oh, here we go again. You know what? That last dip was maybe the dip to buy. The Baidu dip got bought. Baba looking good. I mean, I get talked out of it. I keep getting talked out of China. But everything you're saying is like, man, the valuations are good. If you take away the geopolitical risk, and maybe it's not very high right now, maybe there's a path for some of these stocks to go higher. I mean, Baba, Baidu, 11 times earnings.
What
If you
is
believe
going
the earnings,
on
these
with
things are
Baba?
so
What's
cheap.
what's going on with Baba
It's been
today?
up all day. It opened up. Baidu was tanking, and Baba had none of it. And Bob had already reported just slow, steady climb all day. FXI, slow, steady climb all day. So it seems like there's always rotation into something. Here we are. The S&Ps are flat. They're not rotating. They're selling the meme stocks today. GameStop, $29. It hasn't even caught a sniff of a bid here. AMC sitting on the lows here as well. And what they come and they do is they come and they find something to buy. And you know what? It's kind of China and a little bit of that tech, a little laggard, the tech laggard trade, we'll call it. Because China, Baba, Baidu are tech laggards. But, AMD's been a laggard here. Intel, we talked about that this morning.
Yep.
Could that buy rating kickstart the stock? It absolutely did. It opened at the lows and, it ran up, throwing up another 1.5% here. So there is definitely some people and buying the beaten down tech names.
Yeah, I just want to mention here this came out at 2:34 this afternoon. David Tepper, bullish on China. Alibaba is now his number one holding. Trim stakes in Nvidia, Microsoft, Amazon, Meta, and Google. So there is your catalyst there for
Yeah,
yeah,
helps.
yep, yep.
But they're
So
but they're buying, to Spinner's point too. They're buying weakness. Under Armour was disaster quarter, disaster, and they turned around. They took that green. I mean, they're just looking. This market is like kind of interested in laggards right now. It's kind of interested in laggards.
all right, and let's just take a look at the IWM here. That's peeling back a little bit, coming back up to the to that 210 area, really in the area of the last 2 months highs here. So little bit of as you said, a little bit of diversification here in the markets. I just wanted to cover the Cisco kid, man. Now red on the
Called
session.
that too. Dog, a dog, a dog. 54 a gift last night, 53 a gift last night, 52 a gift on the pre-market show, 51, 50, 49, 48. The stock sucks. So, I mean, again, the laggard trade, this is a key laggard, but it really has been a laggard. It kind of went nowhere. It's been 3 years of going nowhere. Cisco just can't do anything, right? There's certain stocks you just don't want to own.
Okay. All right. Well, it's coming up on 3:34
Yeah,
here,
we're gonna get
Dennis.
we're gonna go get Michael Pachter here, who's gonna be in the background in a second. I'm gonna be back at you in about 10 minutes here. I'll get my wife's not here, I'll get my kid off the bus stop. So
All
I
right.
will be
Well,
back at you momentarily. I'm just gonna go to the background here.
all right. We got Michael there, and you come back for some tough questions with Michael. Michael Pachter, Wedbush Securities, joining us here on the closing print. And I guess I just have to start out with a couple flavors of the day or the past couple days here. I know you're still keeping an eye on GameStop and AMC and stuff, and I just kind of shake my head when I see those kind of moves. Such a story meme driven market. I think I know what you're going to say about these stocks, but I'll let you take it away. Good afternoon, Michael.
Good afternoon. I mean, meme is such an interesting word, isn't it? AMC has value because AMC has legitimate revenue, legitimate potential to make a profit, and the negative in the stock is that they have a giant amount of debt. GameStop's exactly the opposite. They have a very definitely shrinking revenue profile. They don't make a profit, and I'll talk about that in a second. But the saving grace is they don't have any debt; they have cash. So, when you look at AMC, you can come up with a path for them to pay off their debt, maybe by issuing shares, and maybe they'll end up with 10 billion shares. I'm exaggerating, but maybe they'll end up with 6 or 7 or 800 million shares, but they'll make 5 or 600 million a year. You can kind of see how they get there. When you look at GameStop, last year they delivered net income of $17 million, which consisted of 46 million of interest income and a $36 million operating loss. So great, they have cash, and great, they're deposited their cash at 4%. And I don't understand why someone a couple of days ago was paying 1,000 times their interest income in valuing the company. That's what it was trading at. Why doesn't everybody just get paid 1,000 times their interest income? That's just crazy. So, the fact is they lost money last year, and last year is the best year they're gonna have in the next 10. So it only gets worse from there. I will say, in fairness to the CEO, who I think is a not particularly competent guy, he is doing the right thing. He's closing stores. He's trimming the workforce. They're down to 1 employee per store, but you can't go below 1 employee. You can't have self-checkout. And, of course he can cut stores now, but the stores they're going to cut are going to cost them revenue. In the meantime, their overhead is going to bury them. So, this is a retailer, and retail is not a good business without scale. And they sell something that is a declining, business. Physical video games are just not something you have to buy. You can buy digital downloads of the same game. So I don't see them surviving. I don't see them thriving, and I don't get the valuation at 60 or 40 or 29, wherever it is right now.
Do you get calls on days, when those things are going absolutely crazy, or is your clientele just kind of like
I
hands
had a
off on?
I had a fascinating conversation with a pretty large fund because GameStop is in the retail index. So these poor guys' performance is being measured against an index that, I'm sure is normally weighted GameStop, but when the stock goes from 10 to 60, it kills their relative performance. So they wanted to understand it, and they'd never looked at it. And the question they had was, this is a joke, right? This is a bad company that has no business being up here. Because again, a lot of guys, to protect their performance, will just buy everything in their index. And these guys were asking, should, not that they want to short it, but should they buy GameStop? It was a long only fund. It was really interesting. And again, I don't want to burn them because I think they asked very intelligent questions.
Yeah.
Lots of inbounds, once it went above 20, looking to short it. And my advice, which again, I don't expect anybody to follow, my advice is always be careful, because this stock, it went to 30, and then the next day it went to 60, and then 2 days later it's back to 30. Who knows? I used to talk to Gabe Plotkin a lot. He is one of the smartest investors I've ever spoken to, but he got emotional about GameStop and he lost a lot. So if he hated it at 40, he really hated it at 400, but he got burned.
Yeah.
You can't fight the tape. And as the immortal Jim Cramer said, stocks are worth what someone's willing to pay for them. So, I never question a share price. I just talk about the fundamentals of what I think it's ultimately worth.
Okay. All right. I'm going to pop up. We got some stocks here to cover, some real stocks. And I don't know if the gentleman is in the chat today, but he's always asking about, when are we going to get Pachter to come on and talk about app loving? And I've seen you make some pretty good calls over the years here, but is this one kind of exceeded your, I mean, I don't know how many times I've had you on and you talked about this one. Is it exceeded your targets? Are they still on track for what you're doing? Talk about APP, not quite at an all-time high, but well, what do we pop to 88.50 the other day? What's your take on app loving at these elevated levels?
It was probably overvalued when it was way over $100, and it was definitely undervalued when it was down around 10. It didn't last there very long. It kind of normalized around 20. They have a legitimate business with a legitimate market leading solution. So, to make it simple, they deliver ads in mobile games, period. And that is technology that's complicated, because the game company that allows an inventory ad unit in their game, wants to make sure that the person watching the ad doesn't have a disruptive experience. They don't want the person to leave the game and then can't get back in. And when the ad ends, they want them to be exactly where they were before. Everything's in place. AppLovin's really good at that. The second thing they're really good at is targeting. And so, they have a technology called Axon 2.0. It generates higher return on investment, return on ad spend, than any of the competitive products. And the competitive products are from Facebook, Google, and Unity. I mean, there's probably about a dozen guys who do this, but AppLovin is the best. In the most recent quarter, their ad tech business grew by 19% year over year. The industry grew by 3%. So they're gaining mad share from somebody. I think they're gaining it from Facebook. This is a rounding error at Facebook, but it's a really big deal for these guys. I like the management team, smart. They kind of sound like they're PhD program professors. So I think a lot of people who listen to their earnings calls are, kind of eyes crossed and baffled, because it's complicated stuff. But it's just a really good company. And if you think about the number of hours that people play mobile games, here's a secret: 3.5 billion people play mobile games, for real. And the average that people spend playing games is 50 minutes, 50, per day. Now, that's comparable to Facebook. Facebook is 3.2 billion play on Facebook about 50 minutes a day. Facebook does 140 billion in revenue. Mobile games generate around 20 billion. What's wrong with this picture? Why isn't it 140 billion? It's going to be, because advertisers want to find people where they are, And so they're going to find them, and AppLovin is going to be the industry leader and deliver those ads. So I just look at these guys as having the best solution in a rapidly growing market with a demographic which is everybody. So advertisers want to reach everybody, and they're going to find them. So I love this thing for multiple years. I really like it.
All right, so you're not slamming on the brakes here or anything, even after the tremendous run. I mean, obviously there's pullback in stocks and resting periods, but you sound like you're buying the dip here in app loving, and really a nice move. I mean, we had John. I know we've had John over the last couple of years on a lot of green monthly candles there. What's your is it above your price? Have you adjusted your price target on it, or what's your
Yeah,
price?
we did. We took it up last week, and I'm sorry, so many earnings. I had 14 in 3 days. I want to say we're at like 110, maybe
Really?
150. But yes, something above where it is now.
Okay. All right. So let's move on here. I didn't finish up with the meme stocks here. BYON once again, got the big run up coming back down. I'm sure your thoughts are similar on that one, giving back all those gains here. This company, what's your opinion on this one? It's taken back half of that move from 16 to 22. Any comments on that?
Yeah, different. It's a different company. Obviously they're a small online retailer. They were called Overstock. The old management made the mistake in retrospect of shutting down the Overstock brand when they bought the Bed Bath & Beyond brand. So they rebranded the company as Bed Bath Beyond, and Overstock had shifted to become a home goods retailer. But if you remember 20 years ago, it sold closeout merchandise, discontinued stuff. And when they got rid of the Overstock brand, they actually started to lose sales because the Bed Bath Beyond brand wasn't big enough for them to sustain it. They fired the CEO. They brought in Marcus Lemonis, who is on CNBC. He used to be on CNBC with a show called The Profit. I'm a fanboy, so I'm a stan. I'm a borderline stalker of that guy. He's awesome. Marcus has hired a CEO for the Bed Bath Beyond brand. He promoted a CEO for the Overstock brand, which is back up and running. They bought Zulily, which is toddler, home furnishings, so cribs and strollers and things. And they're going to have a 3-headed monster and maybe a 4 and 5-headed monster over time. They can manage all of these with the same model, which is that vendors directly ship to the customer. So these guys don't take title or have any inventory. All they're really doing is listing the product and then arranging for the shipment from the vendor. It's a pretty inventory light model, which means very low risk. I'm really confident they get back to $3 billion in revenue pretty quickly, and they'll generate 6, 7, 8% operating margin when they get there. So, this is a 40 million share company, 42, I think, with the potential to make easily $3, $4, $5 a share. And the stock is, trading under 20. So it's inexpensive. You got to believe in Marcus. I do. You got to believe that people are going to shop online. I do. And you got to believe that they have products that people want to buy. And I believe that as well. So the thing I think that's most interesting is they're going to shift the Overstock brand back to the closeout liquidation brand. And the only real competition for that is a site called Woot, WOOT.com. That's an Amazon brand. And all Woot sells is Amazon return merchandise or Amazon closeouts when they don't have enough inventory in their warehouse. They just want to wipe it out. Go to that site. It's really cool. But Amazon's not buying stuff to sell it. Overstock is going to use the same liquidator that Amazon uses to help it clean out its distribution centers. And they're going to find closeouts, and Overstock's going to sell discontinued stuff. And that's really high profit. So I expect that you'll see their profit margin go up, their sales go up beyond Overstock, Zulily, and maybe, down the line, they'll buy GameStop out of bankruptcy.
Michael, Dennis Dick here. Just wanted to ask you too. Sorry, I'm sneaking back in here from the bus stop. Take-Two going to report earnings here tonight. Obviously, there's not a lot of earnings tonight, so Take-Two is going to get some media coverage just because there's only really Applied Materials and Take-Two. Those are probably the biggest two companies reporting here. What are your thoughts going into earnings on this game stock?
It's kind of a terrible quarter, so I don't expect anything big to happen. The story for Take-Two is that about a year ago, they talked about how the fiscal year that just began, their year ends March 31st. So the fiscal year that began April 1st of 24 was going to see $8 billion in revenue, and that's off of a base of around 5.3 billion. So what could that be? Obviously Grand Theft Auto. Now, they never said it, but you can't grow by 2.7 billion unless you have Grand Theft Auto or 5 other games. And so odds are it was GTA. And then, 6 months ago, they took that number down to just under 8 billion. And then 3 months ago, they said just over 7 billion. What do I expect in 12 minutes? I expect them to say, oh, just over 6 billion. Sorry, GTA is not coming, but it'll come the next year. And I actually think they'll probably say it is absolutely coming, August 30th, 2025. I mean, they'll give a date. They'll have something. So we know it's coming next year. People will look past this coming year. My bias is the stock rallies on that, but again, it's going to cause analysts to take their numbers down for the year that just started. But we're all going to take our numbers up pretty dramatically for the next year. So again, I think that if you're forward looking, who cares about the time value of Grand Theft Auto for 1 year? Doesn't matter. Take-Two's worth a lot. So I really like the company, and I actually respect their management. They're not pushing the game out to make some artificial analyst deadline. They're going to put the game out when it's ready, and that's what you want. You want it to be positioned to sell as many units as possible.
Sticking with the gaming stocks, Roblox reported there last week. They hit the stock pretty hard from 40 down to 30. They're starting to buy the dip here, though, Michael. What were your thoughts on the Roblox quarter, and do you think the dip is a buying opportunity?
Yeah, the management made the mistake of saying they could grow 20% top line for the next several years. And then the first quarter out of the gate that they guided to that, they delivered 19% growth, and they took the full year guide down to 16% growth. Now, realistically, are they going to grow 20? Probably, but they backed off it the first chance they got. And so I think people got overly euphoric about the stock and then got overly pessimistic when they said 16% this year. If they print 20% for a couple of quarters, the stock's going to rip right back up. So I like it. And yes, I would buy the dip. And the crazy thing is, when these guys were growing 5%, the stock was at 26. When they're growing only 19%, the stock was at 29 in a market that's up 20%. That's just crazy. So, clearly it's got value well beyond what they do this quarter. They are really super well positioned because their market is aging. So the 9-year-olds are turning 10 and they're being replaced by some more 9-year-olds. And honestly, I know a lot of parents who play with their kids. So I think they have tons of opportunity. They're one of the leaders in trying to exploit all this gaming activity by delivering ads. And so when they do, that's going to happen this year. I think you're going to see revenues and profits spike.
Okay. All right. Triple D, I just saw the imbalances published there. So I know you're going to get busy there in the final.
Yeah, I'll let you finish up with Michael. I had to jump on though and talk to us. I always appreciate Michael Pachter. He's had
Good to see you, Dennis.
on our shows over the years. So yeah, I'll go and finish up and we'll let you finish the interview there with Joel. So great to see you, Michael.
Okay. All right, Michael, I guess one other one that's being mentioned in the chat here, and I didn't know if I was previewed to ask you about this one, but Unity here, you could take a pass on it if you want. Unity just kind of hanging out here at old-time lows. So
yeah, it's the same story as AppLovin with probably marginally inferior technology. So AppLovin has that Axon 2.0. It's really good at driving installs. You're advertising to get someone to play your game. And Unity is good. They're just not as good. They fired their CEO, who I love. They brought in an interim CEO who is now moved up to the chairman. But he pretty much cut everything he didn't think was a good business. So they are lean as can be. Their new CEO started yesterday. So let's give him, another day or two to figure out the business. But I think that their ad tech business is going to grow much the same as AppLovins has. I think that's a huge opportunity, and I think that market's going to grow 5 or 6 fold. So I really do think that this is just a good company that's in that space. Their second line of business is a game creation engine, and it's a democratic approach. Anybody can use it for free. Anybody who's not a professional gets it for free. So I think that's a real big flywheel to grow the business a lot. And their competitive advantage is, if you make your game in Unity, it's really easy to deliver an ad with Unity because it's built into the system to not disrupt the gameplay. So I think they're great. They're way undervalued. I mean, they're an easy double. But again, let the new CEO come in and tell people that he gets it and he's doing the right thing. I know the guy. I've known the guy for over 10 years. He's a competent game guy. We'll see how he does with ad delivery and game engines, but he's a really competent game developer, and he's well liked in the industry. So I think he'll probably do pretty well.
Okay. Just any closing comments here? I know you drill down on your issues, in the sectors that you cover. You do a fine job of that. Just any broad comments if you want. Just
Well, I mean,
market.
one specific is Ubisoft reported yesterday the stock's down today, and I think the market completely misunderstands what's going on there. They got the rights to all of Activision and Blizzard's streaming titles, and Microsoft needs those things. So Ubi delivered over 100 million euros this past quarter in license fees for Microsoft. And I think that number is going to be 200 or 300 million euros this year, and 500 the next year, and 700 the next year. I think that number just keeps climbing, and it is pure profit. Now, I think the market reacted negatively because the company didn't include it in guidance. And I think what's crazy about that is, if you're Microsoft and you're going to license Call of Duty to put on their subscription service Game Pass this year, do you want to make the announcement, or do you want Ubi to say it as part of their earnings call? So Ubisoft said, we don't have anything in our model for this year, in our guidance for this year. Microsoft's going to have an event on June 9th, and it's called Redacted Showcase. They haven't explained what it is. The word redacted's in it. They're going to announce Call of Duty. Are they going to announce Call of Duty on Game Pass? Maybe. I don't know. But if they do, and then Ubisoft the next day has Ubi's showcase, they're going to say, oh, by the way, we're getting a lot of money from Microsoft, and the stock's going to rip. So I love Ubisoft. Love, love, love it. It's on our best ideas list. I think investors who are bidding it down 13% today are missing the boat. I think that thing's going to fly. So my favorite.
What's the symbol on that? Is there a way to
Oh,
track
it's
it?
French. It's on the French exchange.
That's what I thought. Yeah, I was trying to bring it up a couple different ways. Well, we've been on the line with Michael Pachter. We all know him, analyst over at Wedbush Securities, covering media, entertainment, and gaming. We love it having you on, Michael. And we'll dial you up. I know you like the afternoon, so we'll dial you up again real soon.
All right, Joel, thank you very much.
Thank you. Okay, bouncing around pretty good here heading into the closing print. We just made a new low of the session at 53.2250. Those buy balances took us right back up to the closing price from yesterday at 53.33, but now chopping around pretty good here heading into the close. We got some time to do some ticker time here with 4 minutes remaining in the session. Let me go to the charts here, and the first one that I saw was NVIDIA. And NVIDIA here down fractionally today. Wow, coming right back up to pretty darn close. Is that right? To all-time highs here. Let me adjust the daily. A couple factors here. I know they're due to report soon, so there's a lot of bias towards the upside in stocks that are reporting into earnings. But I'll tell you, after the last 2 days that this thing had, only giving back like a buck 60 here. Actually, we talked about this one, and we talked about the 880 to 920 range, and wow. They made quick work of that yesterday, trading up to 948.62. So headed into earnings here, you're going to probably get a double close here in the same area. 946.30. That was your closing price yesterday. You made a new high on the move here by over $10 when you went to 958.18. But what I've noticed with NVIDIA is that those closing prices are pretty important. So down fractionally today. Keep an eye on that 945 area. I'm sure we'll trade around that level a lot tomorrow. But closing high for the move yesterday, 946.30. It looks like we're going to close right around 944 today. You split those two. And that's been the recent mark. Now, I just want to make a quick note here. And the all-time closing high is in this area too, and that was back on March 25th when you made a all-time closing high at 950.02. So interesting area here going into its earnings coming up shortly. Boom, boom, boom. What do we got here? We are in the final minute. And anybody? Oh, VKTX. That's getting hit on some Roche news. Roche had a similar drug and not great results. So they're a little bit worried about VKTX. This was after some favorable comments here yesterday from Merck regarding the issue. So there you go. Great support at 60 here, just above 60, kind of in no man's land, but I'll be looking for this to catch a 70 bid or hold 70 here. That's about halfway from that recent low in March to that recent peak that you had. Well, sellers are coming out of the woodwork here on the closing print. We're going to be finishing near the lows of the session. New high for the move, but giving it back here in the final 5 minutes. Those buying balances really didn't do much. I just want to show real quickly here on the chart. You got you go shorter term here. People caught those buying balances and were leaning into it. And if they did, they got smoked here because stocks are not closing on their highs for the session. So sorry to add things on a little bit of a weak note here. We are continuing the sell-off here in the after hours. Not sure if we've had Take-Two earnings or something. Nothing yet. So let me see if I could just get any news. That was a pretty vicious sell-off here in the final few minutes of the day. Nope, nothing out there on the news front. So looking at the mark 53.20, that will be your second all-time closing high. And then overnight, we'll be looking back at that 53.33 area. That was an all-time closing high from yesterday. Folks, thanks for joining me here on the closing print. Special thanks to Triple D for joining me as well. Also, Michael Pachter, Wedbush Securities. All right, you guys do your homework. Get ready for tomorrow. Should be a fun one.